Where are the markets right now, do you think? And what are we pricing in terms of Fed?
I think right now the market is deciding between should we be in a risk-on environment or do we need to pay more attention to inflation rates, Fed policy, and so forth.
August can be a period of sort of low trading volumes. That's what we've seen sort of in crypto. This last move sort of seems like it's derivatives led in terms of the liquidations.
The question of whether or not we're venturing into a new cyclical bull market or if this is simply a bear market rally.
Because they're not used to volatility of this scale, right?
Right.
But volatility gives the reward, right?
Right.
So because it's a 70 vol asset, gives these 20, 50, 100 exits, depending what time period you're looking at.
Hello everyone, welcome back to my channel. I must say, what started with a good month isn't going really well now. So what's really going on with the crypto prices right now? I mean, we're seeing a lot of volatility, right? There's also lots of stuff going on in the macro environment as well that's literally affecting Bitcoin. You see, to conclude, there's a lot of uncertainty. And so, crypto is going along with the risk assets, but it's also pretty volatile, just generally. And last Friday, we had a really big drop in a span of just a few minutes, and Bitcoin went from kind of making a move higher to really being back below its 50-day moving average. Other cryptocurrencies have also kind of been depressed in the past few days, say 10 to 20%. In today's video, we're going to cover Raoul Pal explaining the crypto market's recent sufferings and the macro picture behind this. He also shared his trading experience and advice to investors, so stay tuned to the last. You guys don't want to miss this one. And don't worry guys, we will be covering the recent news going around Fed and inflation rate as well. Now, before jumping into the video, be sure to subscribe to my channel for more videos on crypto, economy, and market.
I think the macro was the big thing that actually caught most of us by surprise. Not that the macro caught us by surprise, but the impact it has on crypto. You know, firstly, when you have negative real wages, people have less money to dollar cost average. It's still a retail investment market. And so then the other thing is central bank liquidity being withdrawn. And, you know, if you look at the year-on-year chart of M2 against Bitcoin, they're basically the same thing. So it tells you that as money's coming out of the system, there's less money around. So as you and I know, Mark, from macro from all these years, is that's when you figure out who's swimming without any shorts on, is that moment when there's no liquidity, somebody can't pay for the liquidity that they've been borrowing, right? So that's age old. It happened in crypto this time more than it did in traditional markets. Fine. So that, I think, was the setup. So inflation plus liquidity. So where are we now? We're in a situation where inflation has most likely peaked. From my work, I think inflation comes down very fast. So that fear narrative is gone. And that was holding back crypto. And so you take that away and the beach ball can start rising out of the water. Yeah. Then on the other side is liquidity. If we start looking at what the bond market is telling us, it's starting to tell us that the Fed are going to pivot at some point. Now, the market's still debating this massively, when it is and how. I'm in the camp that it happens faster than people expect and more aggressively because I think the recession is coming harder. So therefore, future liquidity is coming up.
Raoul Pal explains that the green rally we were all seeing earlier this month was mainly due to the reason that everyone was thinking we had reached the peak inflation. But there are several macro environment reasons for the aggressive fall down in the crypto market, and inflation is one of them for sure. Not just the USA, we've also seen things going bad in other places around the world. Take China as an example. We're already seeing liquidity coming out of China. At the same time, growth of M2, the broadest measure of money supply, accelerated more than expected to 12% in July. Back to our news, when it comes to inflation talks, Turkey is also 80% year-over-year inflation. But the Turkish central bank actually decreased their interest rate from 14% down to 13%, in a complete mismatch to what other central banks are doing around the world. What's going on inside their minds? Also, stay tuned to know Raoul Pal's experience and advice on crypto investing. Okay, first coming back to the US investors believe that Fed here is serious, that they remain committed to raising interest rates, and so they've gone risk off. Everyone started selling things like tech stocks, Bitcoin, and other risk assets. We will discuss more about it ahead in the video. Be sure to like and share. Now, what we see is more than 50 million Americans kind of own and believe in the future of crypto. Now, we are all well versed with the crypto market volatility and how the simple approach to making good money over time is to simply buy something and wait, right? That's what we heard every time. So then, why are people viewing this asset class differently? Stay tuned as Raoul Pal discusses this matter.
Because they're not used to volatility of this scale, right?
Right.
But volatility gives the reward, right?
Right.
So because it's a 70 vol asset, gives these 20, 50, 100x, depending what time period you're looking at. And people just are not set up for that because they are mean reversionists. They think the world is cyclical and everything reverts back to where it was. So therefore, every boom has a bust and every bust brings it back to where it started. But that's not what happens here. It's in an exponential trend. So every bust is significantly higher. I mean, Bitcoin 4,000, Bitcoin 20,000. Okay. And that's low to low. I mean, that's extraordinary. But people don't see that. They're not used to it. They don't know how to deal with it. So people are having to learn. I mean, all of us did. I mean, I was shit at doing this because I never realized how in an exponential trend, buying and holding and adding into the big sell-offs is better. I went back and looked at all the times I traded Bitcoin from 2013 when I first got in at 200. I rode it up to, it went up to 2,000 to 1,000. So it went up 5x in 2 months. Went all the way back down 85%. I just held it because I wanted to treat it like an option. I wanted to see, and I had a 10-year view. And I said, listen, it's probably going to 100,000, worst case, 1 million, best case over the next 10 to 20 years. So I held it. It went back 85%. It rallied all the way back up, and I got out during the forking wars in 2018, 17, and I've made 10 times my money and thought I was a genius. It went up another 10x and then came back down again. So it was fine. I went back and then I rebought in 2020 in that sell-off. I went back and did the maths on my much smaller position that I started with versus the much bigger when I really went in, irresponsibly long in 2020. If I'd have just held my original stake, I'd have made 5 times as much money.
So Raoul Pal explains that the reason for this crypto crash is mainly due to the fact that people are not used to volatility of this scale. Crypto market is an exceptional trend, not a cyclical thing. Now, with so much volatility in the market, especially with the Fed openly stating the possibility of hikes, investors are really sitting in fear. Now, one question to ask yourself, will the Fed make it till the end of the year by continuing to be aggressive in their interest rate hikes and tighter financial conditions? Or will we get to a point where they have to wave the white flag? Let's see. Also, do you guys think that the Bitcoin trend will continue, or could we see some real relief ahead? Let me know your thoughts in the comments below. Also, be sure to subscribe, like, and share. You can also hit that bell icon to never miss any video. I'll see you guys in my next video. Adios.